Welcome back to the Data Driven Real Estate Podcast, the podcast for real estate professionals dedicated to driving business using data. I'm Aaron Norris with PropertyRadar, and this is episode 29. This week, we have half the research team at the National Multifamily Housing Council. We've got the Director of Research, Chris Bruen, and a Research Associate, Claire Gray. This week, we talk about trends in the apartment space nationwide. We talk about migration, COVID challenges, and some opportunities coming up in 2021 and the data that they are following in the year ahead. You won't want to miss this week. Hey, Chris and Claire, really nice to have you on the show today. Thanks for your time. I know, Chris, you're in DC. It's an interesting time in the DC area. And you're in the office today. So good for you.
Yeah.
Claire, where are you parked today?
I'm calling in from Arlington, Virginia. So just over the river.
Just over the river. All right. Well, I wanted to start the show off by asking, what's the number one data point you're watching headed into 2021? And Chris, I'll start with you.
The number one data point. I would say that we're always looking at rent collections that we're tracking every month. Well, I guess you asked for one, so that would be my one.
We'll go into more, but I like that. Claire, do you have one that you really got your eye on?
I was just going to say, kind of building off of Chris, like we've been tracking rent collections, but we're finding out that, occupancy, vacancy, that end of it is also pretty important because things are happening differently in different markets. Urban gateway markets are not in the same situation as the Midwest. So just both ends of the picture there.
Ooh, that sets us up so beautifully for such a fun conversation. So if somebody's not familiar with the National Multi-Housing Housing Council, how would you describe it?
I would say, so we are an organization that represents the U.S. apartment industry. And our members include some of the largest owners, managers, and developers of apartments, as well as other industry players like brokers, those in finance or technology related to the apartment industry. And our work is part advocacy. We have a government affairs team here, as well as providing research and insight for the industry. And Claire and I are part of a 4-person research team here.
Very cool. Yeah, the advocacy piece is just so important. And I've been on the Hill in the single family rental space, sort of advocating on that. And data always seems to do a really good job keeping things out of the political sometimes. It's just a really important role. So when it comes to data, what kind of information do you find the most helpful in that process?
In terms of what data do we think is most important? Or?
If you're going to the Hill, is Congress asking for specific insights? Are there any kind of any testimonies that you're doing at the Hill? What are they looking for? What kind of data are they needing to make great decisions for housing? I know it changes, so it could be.
And some of this is kind of in the domain of our government affairs team.
Oh, got it.
But it really, just whatever their objective is, it's important that they have an accurate picture of the market. So just that we're there to provide them with, accurate data.
And that they trust the data that you're providing them. That's always a big piece of it. You mentioned that your members are large apartment owners. Is there a specific size? Can we define maybe talk a little bit about what apartment looks like across the U.S.? Is it over 100 units per apartment complex? Is it, 5 to 10? Any insights into that?
Well, our definition is a rental unit in a building with 5 or more units.
Okay.
But our members are of all different sizes, except we definitely have a large representation of professionally managed buildings.
Has that changed at all over time? Apartments, are they getting bigger, smaller? Any trends in that space that you're seeing?
Um, I don't know if you want. Do you have anything to add to this, Claire? Or
Well, I know we've seen kind of over time that apartment buildings, I think, are getting bigger and maybe the units are getting a little smaller. Maybe more one bedrooms and efficiencies, especially in probably urban markets, trying to save space.
Having lived in New York City, it makes me laugh when somebody says efficiency because I've lived in one of those efficiency units.
I live in one currently, and yeah, we looked at this data recently, and I think since like 2006, I believe, was the year after which there started to be a higher share of units built that were either one bedrooms or efficiencies.
Okay. Is that the Japan model? Aren't they very well known for that? I can't remember if it's China or Japan. Like in order to live in like really great cities, it's almost like a cage. It's really uncomfortable to watch, and they have
I know there's a lot of that in Japan. Yeah.
Yeah. It's just interesting, like having lived 7 years in New York, you're there for the experience. When I was there, I was living in very strange places, and it was just, I was there to live in a great city. And when I went to the apartment, it was the sleep. So I didn't care. But, because of COVID, there's a lot of conversation about migration, and let's just talk about some of the trends. Is there anything that has really surprised you in the apartment space in 2020 because of COVID?
I can't say anything that has surprised me. I mean, COVID itself is such a large shock and surprise that I don't know if there's really any expectation there to begin with.
Okay. Claire?
Yeah, I think Chris is going to get more into our quarterly survey later, but we survey our members based on a few regular questions every quarter, but we also usually try to ask a special question that's a little more topical to what's going on in the market or what we think they might be seeing. In our most recent quarterly survey in October, we asked our members if they're seeing increased demand based on certain building and unit types. So overwhelmingly, the highest demand they were seeing was in the garden style apartments in both the efficiencies in one bedrooms and also the 2+ bedroom units. So probably just people, you're stuck at home, you want to try to get maybe out of the city, a little more space, that kind of thing.
I was going to say, I don't know if I know the garden style. What does that mean?
It's more of like a 2 to 4 story kind of walk up type apartment. The buildings might be small, but the property might have several buildings, not like the mid and high rise that you might see.
Got it.
In downtown areas.
That's what I lived in New York, a lot of walk-ups, and it was typically always the 5th floor. Garden style, that makes it sound so lovely.
Yeah.
Well, let's get into the quarterly reports, because your team really produces a lot of really great data. So maybe, Chris, you can tell us what's included and some of the things you cover.
Yeah, so we have 3 different publications that we come out with quarterly. We have our quarterly survey, where we survey our members on 4 main metrics. We ask them whether or not they think that the markets in which they operate, that the market is becoming tighter or looser, if sales volumes are increasing or decreasing, and this is all relative to the prior quarter, and also if equity and debt financing has become more or less available. And from their responses, we construct an index ranging from 1 to 100, 50 representing no quarterly change. So if there's an equal number of respondents who say they think things are improving relative to those who think things are getting worse, then it would be just at 50 there.
Wow.
So
how many owners do you survey? Just curious.
We usually get around, Claire, would you say around 150 responses?
Yeah, I was going to say anywhere from 100 to 200. I think it just depends. Sometimes in the winter time or summer, people are out on vacation, maybe not as many, but.
Any idea how many of those 150, how many units they represent total?
It's not something that we track.
Got it. Okay. But
yeah.
I mean, those are 150 owners, and some of them are going to own many apartment buildings, so there's going to be quite a few. So that's good to know. So
Right.
what are you guys seeing as far as some of the data that you're seeing?
Let me think. So I'm trying to just recall. I have some notes here on the first quarterly survey we had during COVID in April had all the indices come in below 50. So condition like indicative of, market conditions were getting worse. There was pretty widespread agreement about that. And then in July, all the indices also came in below 50, with the exception of the index for debt financing. That was after the Federal Reserve took some pretty aggressive actions, and interest rates got lower. So you can see how maybe there was increased availability of debt financing there. And then in our most recent survey, let me try to remember.
I think it was just market tightness was the only one below 50.
Right. So so markets got looser for a third consecutive quarter, but everything else was trending up. So there was increased sales activity and more availability of debt and equity financing.
That's a good thing and would definitely aid in that tightness number. So the things are moving. Are you able to see insights into specific area like urban markets like New York and San Francisco, compared to more rural and suburban markets?
So we sometimes receive some data from a private data provider called RealPage, and they have some more detailed market specific data. And we have looked at occupancy changes and rent growth by markets. I'm looking at the second quarter data here, and we saw, let's see, in the second quarter, actually rent increase in low-rise buildings. And there was a negative rent growth in mid-rises, and even larger negative rent growth in high rises. So that is consistent with urban markets taking a little bit more of a hit. And it was a similar story with occupancy that saw a decline in occupancy most in the high rise buildings.
What are you seeing as far as the percentage of rents being paid right now from your members?
So for a little background, we started a rent payment tracker in April with 5 private data providers that provide property management software. And so from April, we've been tracking that. And it did take a little bit of a dip in April, but really through the summer, things were down a percentage point or two from where they were last year for full month results.
That's it?
So yeah, really speaking to, people want a safe place to live. They're paying their rent. And I know we've heard anecdotally that, property operators are, have these open lines of communication with their residents. Maybe they're helping them find local, rental assistance or food aid, that kind of stuff, helping to make ends meet. So we did see a little bit more of a deterioration in the full month November results. It was down about 3.5 percentage points from the previous November. But we don't have our full December results yet.
Yeah, everybody's calculating that up, and that's interesting. And of course, we were waiting to see the Congress get through another aid package, which came through, and rumor ours are already working on the next one, and the vaccine's coming out. So, are you getting a sense that apartment owners are relatively positive for 2021?
I don't know if it's not as if I've spoken to any owners about if they're what their outlook is like. But I just wanted to get back real quick to the collections to
Sure.
note that while those collection figures are positive, that's not to say that residents aren't struggling to make their payments.
Sure.
And it's not to say, we hear a lot of instances of owners working out different payment plans with residents. So even though a lot of them end up making their payments, there's kind of more to that story.
Oh, okay. I see what you're saying.
Definitely.
Got it. Okay.
And those percentages are, oh, sorry, Chris.
Oh, go ahead, Claire.
I was just going to say, though, it's also those percentages are for a full or partial rent payment, or they could be on a payment plan. Yeah, like Chris was saying, this story is a little more nuanced, and it's also with the 5 data providers, we're looking at a universe of about 11.5 million units. So even a 3.5 percentage point decrease is almost 400,000 households that didn't pay rent. So when you put a number to it, it is still maybe a little bit of a stark picture. But like you were saying, the COVID relief bill with rental assistance and expanded unemployment definitely came when it was needed.
Yeah, we brought this up a few times on the show. I'm on the board of 211 for Riverside County, which is a health and human services hotline. And our United Way that runs the 211 actually got the CARES Act funding to work with landlords to pass on grants to pay back rent for tenants. And there's some very large landlords who got some very large checks, which is incredibly helpful. I wish everything was so easy. Unfortunately, 211s are managed differently at every county level, so they're not all structured the same way. But I'm sure that the aid that's coming through the CARES Act has just been very hit and miss depending on where these apartment owners are located, unfortunately. And if they live out of state and they're not professionally managed, maybe it's a mom and pops. The tenants might have a very different experience if the landlords don't know what's available locally. It's just hard to follow all this stuff. It's changing so quickly.
It is. That's something too with our rent tracker. It is just professionally managed apartments, so it doesn't capture any of the smaller properties like the mom and pop, like you mentioned, or subsidized housing or military housing. It's really those, class A, class B, professionally managed apartments.
Do you get a sense of nationwide who owns apartment buildings? Is it predominantly professionally managed, or are there a lot of mom and pops in the space?
There are a lot of smaller buildings, smaller owners, even if, maybe it's a mom and pop and they own a couple buildings, but it could be a couple buildings that have 4 units. Where really the income that they're making from rent is to pay the mortgage and put food on the table, and that's it.
We have we come out with our annual top 50 lists, the largest owners, and when we do that, we look at the percentage, what share that those 50 are of the total apartment stock, which there are around 20, or I think 20.1 million apartments. And I can't recall how many were in the top 50 last year, but we do report on what that concentration is.
Interesting. So there are a lot of mom and pops out there. I always tell a lot of real estate professionals in different buckets, if especially investors seem to be very independent, not always part of associations. I don't know if they necessarily understand the value and how much work it takes to do the kind of research that you do and advocating on behalf of the industry and that very political side of lobbying and providing data. So join your local associations and national associations. It's pretty incredible. And on your website, you've got so many other things. You've got the quarterly survey, the rent payment tracker, and you've got the construction survey too. Is that the third thing that you're talking about?
Well, actually, no. That is an additional survey that we started to put out during COVID.
Oh, so separate one. You decided to start a whole bunch of new things during COVID. Good for you.
Yeah, I mean, we have our 3 main publications, which I talked about: quarterly survey. We also have our market trends publication, where we report and comment on key metrics in the industry like rent growth, vacancy, demand levels, that kind of thing. And then we also have a research notes publication, quarterly publication, where we do more in-depth research on just whatever topics we find interesting or relevant to the time. But yeah, in addition to those, we have been putting out this construction survey throughout COVID. I think Claire's probably more familiar with some of the findings.
Yeah. So we started this because, like you were saying, during COVID, people were just hungry for information, and we have a variety of different members. And so early on in the pandemic, there was a construction moratorium that kind of halted all construction, multifamily included. So we were trying to capture what was going on with our members so that our lobbyists could take that information to the Hill. So we started in, I think, late March, and we've done 5 rounds kind of spread out, with the most recent round happening in October. And pretty consistently, there have been about 55% of respondents that were reporting construction delays. And of those, we ask if it's in permitting or starts. And pretty consistently over the course of our surveying, it's increased the share that have said it's, they're experiencing delays in permitting. I know in our most recent round in October, it was 90% of those that were experiencing delays were experiencing them in permitting. 77% were experiencing delays in starts for their construction. We ask what's causing the delays. Obviously, economic uncertainty was a popular answer, but also some of that permitting and entitlement, and also availability of finance. We ask if they're experiencing delays in financing, which was a popular answer, or if they were unable to get financing, which it seemed that the issue were it was just delays, not so much that they couldn't get it, but there's just a lot of backup right now. I know we ask about materials, so if they're experiencing a lack of materials or price increases in materials. So early on, especially imported materials like countertops from Italy or things like that maybe you're not thinking about being part of this big picture, or elevators or cabinetry or AC units. As far as price increases, I know lumber has been an answer. Every single survey, people are seeing price increases in lumber. And also everyone's doing home projects because they're stuck at home.
Sucking up all the wood.
Yeah, exactly. So that's a lot of what we're seeing, but our members also say that they've, adopted new strategies to overcome some of these hurdles. Maybe it's new technology, maybe it's health screenings, it's PPE, it's staggering shifts. So it's been really interesting to see kind of what our members have been doing to be proactive about what's going on. And I think because of some of that, there haven't been as many issues with labor. Early on, it was like, oh, people are getting sick, they're not showing up, they're nervous about getting their family sick, that kind of thing. But as we've gone on, they've, worked out the kinks and figured out how to get everybody there safely and still work.
I was telling Chris before we started recording, I just got an email. I am very close to the building industry, and I got an email from one of the county's health departments saying that their staff was being diverted to COVID response and vaccinations, and that to expect more delays for the health, specifically health permitting, health department. So I was like, oh boy, here we go. When you're doing 1031 exchanges, that's not the news that you want to hear. Tenants, do you do any research on tenants, what they look like, how they've changed over the years, sort of at the demographic level?
Yes. So we talked a little bit about there being more one bedrooms and efficiencies. Mm-hmm. And one reason for that is that there are a lot of single people out there. There have been some broad demographic trends. People tend to be getting married later, having kids later. So taking longer to make that transition from rentership to ownership. And also, there's been a long run trend of more young adults living with their parents, which kind of, so there's this kind of dual effect on demand for apartments there, that on the one hand, you have people renting for longer, but then you also have more individuals who haven't even entered the market yet, who are still with mom and dad. But I think that might explain some of the unit mix out there, catering to singles.
Boomers are seniors deciding to move down into exciting cities, into some of these efficiency units, just looking for something to do, maybe.
So we looked at that. You often hear this narrative of the downsizing baby boomer, like are they moving to the city at higher rates than other generations? And what we found was actually that they're not really doing so at higher rates. It's just that they're just such a large generation. There are so many of them that whatever they do is magnified. So yes, obviously, as they get older, you're going to see a lot of them moving into cities, but it's not as if they're only doing that. They're not really that much different than prior generations from what we've seen.
Has there been, as far as apartment construction, have you guys done any research on the features that owners, as they're building, are having to lean into sort of for the next generation of apartment dwellers?
Well, we do conduct it. Another thing we do is we conduct a resident preferences survey, because we're trying to get a feel for what people care about.
Yeah.
Our last survey, we had responses from, I'm trying to recall, I think 270,000 renters across the U.S. And Claire and I guess we could try to recall some of the main findings. I'm trying to remember what they cared about.
Things like gyms are still important. I think more of the kind of, we call them like on demand, or, people want seamless interactions. Like maybe it's a tech in their apartment, or like key fobs, things like that. Rooftop spaces, high-speed internet
is always a big one.
Yeah.
A lot of, the basics as well, like air conditioning.
Having lived in New York, I get it. It's not everywhere. Okay.
Oh, and one of the features that always tops the list is soundproof walls.
Yes.
Amen to that one. I've lived below somebody in a basement apartment in New York that like to bounce basketballs at 6 o'clock in the morning quite consistently. So I get it.
Yeah. I tell my family that I live in that clogging insurance commercial. I'm not sure which insurance company it was, but it shows the family above them clogging, and you can hear them. So I get it too.
Yeah, it's definitely a different living experience, but having lived in downtown Los Angeles, and it was the first time I was in a rental unit in a while, I was really surprised to see all the technology. Their target market was definitely something different that I had not experienced in New York as a starving artist. So in this building, the fancy cars below, the huge gym, the full basketball court, the movie theater, the office space that you could rent. I mean, the amenities were pretty spectacular in downtown LA, and it came with a price. And then I'm looking at trends like co-living and the professionalization of the space that actually do a good job stripping all those amenities, where the concept is just one price gets you everything, up to, I've seen some co-living companies do things like salt and pepper and olive oil and monthly cleaning, and going as far as doing things like activities like, hey, we've put together a coffee with your local council member. So it's almost like you're selling a lifestyle, not just a unit. So has Has there been any pressure that you've seen on the feature front that's more lifestyle driven and not feature driven?
We ask about that stuff in our survey as well. And I feel like if I recall correctly, people, renters, that it's really kind of secondary to them, I think,
Okay.
to the things like what they're paying and that their unit has like the essentials.
Okay.
And I would say also, sometimes we break it out by age or income or geography. And I feel like for younger renters, sometimes it's this would be nice to have, not need to have kind of things, aside from, ASP and high speed internet is a need to have for everyone. But we found that the younger renters, I think, are also, we ask if they're open to like co-living situations or if they would be open to short-term rentals in their building. And generally they were more open. I think we asked if they would definitely or would possibly be interested in that. And they were definitely more open to it than the renters that are a little bit older living in apartments.
A little more flexible. Okay.
Yeah.
I'm just thinking about owners, or I definitely have some people in my life that are, they've done single family for a long time and they're getting into the commercial space. And so interested in exploring apartments and what that would mean. And I'm sure it's very market driven as far as the features and maybe the demographic that you're chasing. If you're in some markets, it is just a story about essentials. But if you're in markets that are highly competitive and people have choices and you want a specific target rent, you got to play ball a little bit. But yeah, was just curious. I was going to ask you on the construction side, are you expecting a good amount of construction in this year?
So I was just looking at kind of what our completions figures have been, and or I had the tab open. But completions have actually been, we're actually up a little bit in the third quarter, and at some of the highest levels we've seen. So even though permits and starts were down, so I guess there despite delays, there were still a lot of units coming online there. So I would expect, for the year, the first two quarters were a bit lower, but not by much. So I think we're still looking at pretty high levels of completions there.
Okay. If starts were lower, we might not see that, for another year or so, right? It might slow down next year. It's almost like the COVID pause for construction, and then might pick up a little bit. Affordable housing is a huge conversation. I know in the single family space, I'm here in California, it's almost like a joke. It's like, yeah, we can't build affordable housing in California. Is there a lot of pressure on your industry to somehow pick up the slack in that department?
Sure. We track the percentage of apartment households that are what we call burdened or severely burdened, who are paying over 30% of their income on rents. That's cost burdened, and severely burdened would be paying over 50% of their income on rent. And these have been figures that have been going up since as far back as we've been tracking, like back to the 80s. Burden levels just keep getting higher. And it's partly an income issue. If you look at income growth over time, it's been very lackluster, especially for those without college degrees, very stagnant income growth. And for those with very low levels of income, it's almost impossible to build housing that's affordable, So there's the income side, and then you have some of the areas of the country where you just have really high levels of population growth and not nearly enough construction to keep up with that.
Yeah, a lot of people putting pressure on fewer and fewer rentals. So yeah, the prices are just going to keep going up, and people get pushed out, and it gets very political. What can we in the industry even do? I don't know.
And actually, there's if you look at, so I know it seems like in the past decade or so, we've been building a lot of apartments, But meanwhile, we've seen, vacancy levels go down, like high rent growth, and you think, why is this happening? It seems like we're building a lot, but if you zoom out and look at a longer term perspective, we haven't been building. So this is when millennials have been entering the housing market now, but when boomers entered, we were building much more apartments back in the early 70s and through the 80s. Were much higher levels of apartment completions.
I see that. I follow the data here a lot in California, and this came up. Where was I speaking? I was speaking at a realtor association. Somebody asked me about builder. I'm like, part of the problem is that it's almost like we took a full decade off of creating buildable lots. We haven't turned raw land into buildable places where builders can have at it. So we're behind, and that is not a fast process. The entitlement process is not fun. One of the opportunities I hear coming up more often is the concept of mall renovations for cities that don't want their mall to become the the next Amazon distribution center, maybe building in density in new ways. Are you part of more conversations as cities sort of rethink their master plans and building in density?
I don't know if our department has been part of any of those conversations per se, but
well, you should be.
I'm just thinking. I have a good one of my best friends is in Indianapolis, and his apartment building was in an old mall, and it was a really interesting building.
Yeah, I know here in Arlington, I've heard more about like office conversions into apartments as well.
Really? Yeah, that's a whole different COVID conversation, right? That not as many offices are needed, or the hospitality, can we convert them somehow? I wasn't expecting the office thing to come up though. That's interesting.
It could just be one particular building. I just know in my little not little neighborhood, but in my neighborhood, that's what I've heard.
We have quite a few real estate investors that they'll hear different things as we're talking and go, oh, okay. And the process of going down to a city, and sometimes you don't know until you ask. You go down to the planning department and see what they're willing to do. And I was in downtown LA working right before the downturn, and they were converting actually quite a few things like the Edison, the old utility building, into a condo building. So it was going on quite a bit. So you just never know. Downtown LA has completely changed over the last 15 years with residential. Is there any cities that look like they're going to just be really hot in the next couple of years for apartments?
So we generally try to stay away from forecasting and
got it. That's fine.
In the future in that way. Yeah.
What are interesting things shall we talk about in the apartment space? It's definitely not my my wheelhouse necessarily, but I'm fascinated with the trends and some of the data as people sort of consider how to tackle this year.
Well, I guess one topic I maybe should have talked a little bit more about before, when we were talking about migration, is that when COVID did hit, I conducted a little study to try to anticipate how something like this would affect where people are moving. Mm-hmm. And like I said earlier, we didn't have much to go on in terms of like other pandemics.
Yeah, so not a lot of case studies.
But I did want to play with that idea of, I actually focused on young adults. I wanted to play with that idea of young adults are choosing whether or not to live with their parents or if they're going to form households, and if they form households, if they're going to rent, if they're going to own, or if they rent, if they are going to have roommates,
Mm-hmm. Okay.
And I figure that a lot of this is a function of income. So what I did, at the time I was using 2018 data, and I just wanted to see the relationship between the likelihood of either living with their parents or renting alone or renting with roommates or owning a home, relationship between that likelihood and a number of factors like your age, your income, your educational attainment, your race. And then once I constructed that model, you can play with it and see what happens if you decrease people's incomes. What would happen. And I think my findings were kind of as you would expect. With lower incomes, you get a lower likelihood that people are going to buy homes. You have a higher likelihood that people are going to live with roommates if they're renting. Mm-hmm. And you have a higher likelihood that people are going to live with their parents. And in fact, what we have seen, we've been tracking through the current population survey, the share of young adults living with their parents. And during this COVID period, they've reached the highest share since the Great Depression.
Really?
Mm-hmm.
Wow.
This is that share there's been a longer term trend there as well. As I spoke to before, that we have seen more young adults living with their parents, but even in the shorter term, because of COVID, that's spiked.
I've definitely heard that. I mean, the millennials, let's be honest, millennials were called the boomerang generation, staying at the parents' home for a really long time. And some of their other buying habits, though, too, were really interesting. They were renting a lot longer, but when they got into home ownership, they were jumping in some states like California, their median purchase price was on par with what boomers were buying. And that was just a few years ago. It was so interesting. So that kind of information is just so important to understand the trends, because it could really change what you build, where you build. Interesting.
Yeah. And it has implications for the apartment industry. Obviously, those folks living with their parents, presumably that's pent up demand for apartments that eventually those people are going to want to form their own households. But maybe they're going to take longer to do so. And when they do form their households, they might take longer to buy a home,
One of my favorite micro living stories is the oldest mall in Rhode Island was, I think maybe in America, got converted to micro units, 300 square foot. And there's this YouTube video talking about a nurse that she trains in for the week, and she lives there, and then she doesn't live there. Do you think COVID will change some of those sort of, I don't even know what you call those kind of people that are looking at these efficiency units because they're executives, or they just don't want to drive the hour or two in markets like New York or San Francisco? Think anything might change there as when it specifically comes to apartment demand in these efficiency units or one bedroom?
I mean, is your hypothesis there that there will be less demands for the efficiency because they'll be working from home? Or
yeah, exactly.
I think that's something everyone's been trying to speculate about, but it's not something you could really. I don't think there's any data that will help you there. It's trying to predict people's future behavior. Are people going to revert to how things were beforehand? Are we going to start going into the office like we did before? And I don't know if I have an answer. I don't know how you feel, Claire.
I was going to say, with our quarterly survey special question that asked about where our members were seeing demand in those like particular property and unit types, we also asked them how long they thought. So again, this is just totally opinion, but most of them, we gave them the option of like through the pandemic or 6 to 12 months beyond the pandemic, and then longer timeframes as well. But those two were the ones that were most popular. So I think people probably feel like there's a, return to city, that kind of thing.
I think so. There's a different reason why you live in the city. And I don't know. I guess I just feel like a lot of people are just dying to get back to normal.
and this is just, me speaking, I could have moved out of the city, and I've chosen to stay in my tiny apartment. And so, people like me still see the benefit and are eagerly awaiting for things to be reopened. And obviously there's much more to a city than being close to where you work. There are a lot of, amenities, restaurants, bars that people like being here for.
Yeah, it's about lifestyle, quality of life, and it's so different. I joke about, is there going to be like buyer's remorse in a year when they finally get to experience their first winter in Minneapolis, or experience Florida's humidity for the first time over summer? They're like, I'm going back.
Well, it's interesting you mentioned that, buyer's remorse. I think that's been another kind of narrative that I don't know if I've seen any data on it, but that a lot of people are buying homes, and like I said earlier, like if when the economy takes a hit, all else being equal, you're going to expect, I think, fewer home purchases, and COVID is maybe a bit different, and you might have people who were already going to buy a home who thought, okay, this is my chance to get out of New York, and you hear stories of people who have tons of money, and maybe it's not an issue for them to do so. But long term, I can't see how COVID will increase home purchases in that way. You don't necessarily have to buy a home to move to the suburbs or to move out of the city.
Yeah, and part of it's just a function of lower listings right now. I mean, in some markets, it's just so insane. I was talking to a realtor in the Palm Springs area that they've never had in a really high dollar category, multiple offers, like 8 offers when they used to experience only 2. Realtors in San Diego and Palm Springs talking about Bay Area people coming down because their median purchase price of a home up there is, I think, something like 1.7 million, where in San Diego and Palm Springs, it's half that easily. So it's just so interesting. If the remote work does stick long term, and the office says, I only need you up here once a week, twice a month, all of a sudden buying a house for in San Diego and taking a flight up to San Francisco, it might work. I don't know. I guess that's the thing I'm waiting for. The one data point that I'm really interested in is to see if remote work is going to stick. And if businesses like this model, being on Zoom all the time, I don't know.
Well, even within our company, before COVID even hit, we had more people switching, sometimes full-time remote work. Okay. Partly as a function of, we have limited office space and someone wants to work from home.
All right. So you guys were already used to it. And this has forced the entire nation all at once to get really good at this conversation. So that's what I'm excited about. We'll see. Claire, have you been working on any kind of research that gets you excited?
I also did a research notes, like Chris was talking about his earlier on. I worked on one in September that kind of looked at which renters have been most affected by the job losses that we've experienced during the pandemic.
Great.
So that was really interesting because, there were some publications from like Urban Institute or Turner Center that looked at how renters have been impacted, but we kind of wanted to take it a step further and look at apartment renters because that's what we're dealing with. So we found that there were some occupations that faced significant job loss that also employed a greater share of apartment residents. Some of those being accommodation and food services, arts, entertainment, and recreation. So apartment residents make up about 12.5% of the adult population in the US, but we looked at where they made up a greater portion of some of these sectors and subsectors. We used data from the current employment statistics survey from BLS to see job losses, and then we used the American Community Survey to look at their occupation codes and shares of apartment residents in those occupations and match them up. And so, for example, accommodation and food services 18% of that workforce is apartment residents, which is a higher share than the US population on the whole. I know motion picture and sound recording faced like a 50% employment loss from the start of the pandemic through August. That was the time frame we were looking at the time. And I think it was about 21% of those employees are apartment residents. Arts and entertainment, or arts and spectator sports, about 18% of those residents or those employees are apartment residents. And they also face pretty significant job losses. So just those industries where relative to the size of the industry, they face great job losses. Because one thing, motion picture and sound recording, not a huge industry, but when you look at relative to the size of it, the share of job loss was pretty significant.
Like in cities like LA, though, that's a sizable portion of the workforce. So yeah, I could definitely see how that would impact. Yeah.
Yeah, exactly. We did take a look also at kind of the geographic concentration, and it is, it's kind of the tourism driven industries that really were hit the hardest. And so in places like LA and New York, had a high share of those apartment residents that have faced job losses. But we also saw that in like Miami and Orlando and Las Vegas for those more tourism driven ones. And then of course the arts and entertainment also in New York and LA were really hard hit.
That makes sense. What's your guys' process? Where does the concept of doing research start from? Is it your members? Is it Congress? You wake up in the middle of the night and just have a dream about this next data set you want to find out?
I would say sometimes it comes from members. They'll contact us and ask us all sorts of questions that they're interested in. And sometimes we'll find it really interesting too. I think, but sometimes it's just, one of us will think of it and we'll all agree that it's a worthwhile idea.
Very cool. So anything on the radar for 2021 that you're just dying to tackle?
Let me think.
Or data that you wished existed that you don't have?
Well, I guess, one topic that's come up recently that we've been thinking about is, we get this question a lot. What's the average length that people are staying in an apartment? And we've never had a good way of getting at that. So we normally look at like different census surveys, which are different cross sections every year. So it doesn't follow the same people over the years. And what we are able to see, and what we typically track, is like the percentage of apartment renters that have moved in the past year.
Okay.
Which is interesting in itself, especially since I don't know if you're aware that internal mobility has been declining for decades in this country.
What do you mean by that?
That people are moving less frequently.
Oh, you mean as a geographical location, or just in general? Like I parked in this apartment and I'm staying here for a really long time.
Yeah, the latter. So
got it. Okay.
So in any given year, the percentage of people who have moved in the past year has been declining. And we've even after taking into account differences in income, education, all these things, there's still this decrease in mobility that we haven't been able to completely explain.
That's interesting because that's happening in the single family home space though as well. Like,
oh yeah, absolutely.
People are going
in every space. Yeah.
Interesting. I really didn't know that was happening in the apartment space. And
well, obviously, apartment residents move more frequently than people in single family, but yeah, still at a slower rate than they did like 10 years ago. But anyway, aside from that interesting trend, which I'm always looking to try to get to the bottom of, we are looking at ways to maybe use those rates, the percentage of people who have moved in the past year, to approximate what the average length of stay is for different subpopulations.
That'd be a really interesting metric, because if you're an apartment owner and yours is just really messed up, you're like, I have a really crappy manager. It is. That would be a really cool data point. Okay.
Yeah.
All right. Claire, you have anything interesting you want to tackle in 2021?
Oh, gosh, I'm sure there is. I would say it hasn't come to me yet, but it's.
Fair enough. Any tech trends well, actually, I wanted to ask real quick. You mentioned that you work with some of these software providers, which they might have some of this data. I mean, how awesome has that been that more apartment owners are leaning on these technology providers so you have access to that? That's cool.
Yeah, it's definitely been helpful for us tracking what's been going on through the pandemic.
Because I know mom and pops probably wouldn't capture all the bullet points that they can have give you access to. That's for sure. Technology trends I attended CES last year, and one of the things I was fascinated with the most was there was a company that worked with apartment buildings, and at the time they were working with a number of very large operators in Los Angeles, where they were putting sensors on the AC and the water heater, and they had a partnership with the utility. And when the utility needed to burn off extra electricity so they didn't have to sell it off the grid, they would just hike up the AC, and the property owner actually made money. It was really fascinating to me. Have you heard of any really cool technology that has gotten you really excited about the apartment space in the last year?
We have an annual it's called OPTEC, so it's Operations and Technology Conference that took place in November virtually for us, which is really interesting. And there's always a lot of programming, so sometimes it's hard to even take all of it in. I know something that they talked about a lot with COVID, apartment operators kind of had to make this like automatic switch to virtual leasing, virtual tours, that kind of thing.
Yeah.
And, is that here to stay? Which it seems like in some scenarios it is. People are they want to see their unit, but maybe they're fine with a video or something like that. So that's something that kind of came out of necessity at the beginning of coronavirus. Some people had adopted it beforehand, but not a ton. And just, it's whether or not it's here to stay. That's something that people were talking about a lot, just that automated component.
All right. Chris, you see anything that got you excited from that conference?
I'm trying to remember. I don't know if we had a innovation challenge this year, Claire.
I don't think so.
But I'm trying to recall who the winner was last time and what that was.
I think it had to do with like modular building. Which is really interesting.
I think you're right. And that's a topic that always comes up, and it always seems fascinating. But I've never really gotten into the weeds to know how much of an impact that might have on the industry.
It's still really expensive out here in California. We have accessory dwelling units. That's been a huge conversation because of affordable housing, and the state has mandated it. And there's definitely a supply chain issue right now. Labor is an issue out here, like you guys, we've already talked about. But it's still just too expensive. So 3D printing, modular, I'm really excited about it, but it still has to come down in price a little bit. But IKEA just raised their hand. They're building tiny homes now. And, fun fact, Amazon several years ago invested in Plant Prefab. They actually do manufacturing here in California, very close to where I live. And they do They have a multi called Nest. And so it's very modular, but it's built off site and brought in. It speaks California's language. It's green because it's done in a warehouse, and all this kind of stuff. If they can make it affordable, I just think that's got to be the future with robotics. And I love this stuff. So Plant Prefab,
really cool.
One of the only ones that I know about in the commercial space right now, but I've seen others with oh gosh, what is it called? The shipping containers and piecing them all together. I don't know.
I've seen that. I was gonna say I don't remember if it was last year, maybe the year before. someone, maybe HUD, put on like an innovation type challenge on the mall here in DC. And I'm pretty sure someone 3D printed
Mhm.
tiny house on the mall, just very cool exposure to that kind of technology.
Yeah, Icon, build Mighty Buildings. They're trying. Icon is out of Austin. Mighty Buildings is based out of here in California. So they're here, but the average price point is just really high. Plant Prefab has a modular unit that's I think the starting point is around 180 grand. So you're like, oh, that's a little steep, but it's coming. So I'm excited. Now with IKEA in the mix, who knows what's next. So let's talk a little bit. We've run out of time. How can people find specifically your work? Where can they go on the website and stay in touch?
Well, I think our website's gotten a little bit better over the years, and it's a little bit easier to navigate. If you could just go to nmhc.org and go to research and insight, it should be pretty easy from there to find what you're looking for. And if you want to contact Claire or I individually, if you go to about to staff, you can find our contact info. There might have been things done in this interview that we've forgotten or that you want to know more about. Just feel free to give us a call or shoot us an email.
Very cool. And right, I will make sure to post the links in show notes. And thank you so much for being here.
Thanks, Aaron.
Thank you.
Thank you for listening to the Data Driven Real Estate Podcast. You can find show notes and links to some of the resources mentioned in the show at datadrivenrealestate.com. Click that Join the Community, and you'll be forwarded to the Property Radar community where you can ask questions about the current show and even see upcoming guests and ask questions there. We'd love to engage with you in the community, so check it out. Please don't forget to like, favorite, subscribe, and share on your favorite platform where you're listening to the show. It helps us out a great deal. Thanks for listening, and we'll see you next week.